as a married couple, phenomenal planning vehicles. And we were talking, and a lot of the charities that I know who will act as trustee of lead trust say maybe they've done a few in the last few years, but certainly not in the volume that we kind of hoped. And the big wealth advisors are telling me their clients aren't doing that many of them either. So who's in the room who does wealth advisor? Talking with people at the really top. Anybody doing lead trusts? Yep. Okay. So you are doing some. Are you doing shark fin? The ones that I call balloon payment lead trusts, where you get a little bit each year, and then eventually at the end the big money goes to charity. To me, that's the kind of the cutting edge, and I'm not sure the IRS really has approved those. They make me a little nervous. But again, lead trusts, again, normally the big issue here, the donor really shouldn't be the trustee if you don't want the assets pulled back in your estate. And that's, to me, that's been the big challenge. Again, I'm going to skip through that, but you've got all the information, so you can read and learn more about it later. Remainder interest in personal residences or real property used for agricultural production. The big challenge here has been you can't use investment property. So you've got somebody who owns a lot of commercial property, and they want to continue to, in effect, own it for the rest of their lifetimes because they want the revenue, or they want a family member to get the revenue, and then eventually they want charity to own it. It's commercial property. You can't do it. So another limitation. Undivided interests. This is where you've got something, but you don't want to give it all the way to charity, so what you do is you give a percentage or a share, a fraction. I give a 10% undivided interest in real property, or 10% undivided interest in something else to a charity. The laws changed a number of years ago, particularly around artwork, about trying to do this. You gotta, there is a period of time you have to have actually given 100% to get the reductions. Intellectual property gifts, again, I'm not going to go through all this, but I included it for you. Lots of rules. Now, royalty interests aren't too tough, but copyrights. Try to give a copyright to a charity. Can be very difficult and not have very nice tax deductions. So I'm going to skip through that. Patents, another thing that certainly major universities see. So again, the result of all these rules is we've been trained to think what qualifies under the Internal Revenue Code. So I would suggest to you, who cares if it qualifies under the Internal Revenue Code? I really don't think most donors and most clients today are all that motivated because so few of them really are going to benefit from those deductions. So that leads me to, for the 99% of people who don't need an estate tax charitable deduction, but they want to include something in their charitable plan, their testamentary plan, that will benefit charity, but also is going to help survivors. So they're not ready yet to give up all of it. They want survivors to have some benefit from this. What are our other options? And again, I would suggest to you that non-qualified gifts are possible unless they're prohibited by state law. And so we're back to, again, what's the law in Michigan? What's the law in Ohio? What's the law in Indiana? What's the law in Texas? God help us, what's the law in Louisiana? Right? Who knows what the law is in Louisiana? Napoleon knows, and nobody else does. And then we have states that have very progressive, innovative, challenging trust law, like Delaware, South Dakota, Alaska, right? The places where you can have 200-year kinds of trusts. So again, it doesn't work under state law. Again, but remember, when we're talking about testamentary planning, so long as you're really just concerned about who gets this stuff after you pass away, and you don't need the estate tax charitable deduction, you can do a lot of non-traditional stuff. But if you're doing it during lifetime, some people will say, well, yeah, I know I won't get the income tax charitable deduction, but so what? I wasn't going to get it anyway. But remember, if it doesn't qualify for the income tax charitable deduction, it doesn't qualify for the gift tax charitable deduction either. But again, I would suggest to you, at $5.34 million, now we have unified gift and estate tax exemptions again, at $5.34 million per person, so what? Right? So I want to do something during a lifetime, like this man out in California, that he wants a life income and he wants it to continue. He doesn't really care about the income tax deduction. When I say to him, now be sure you talk with your advisor that this is also not going to qualify for the gift tax deduction, which would mean you're gonna have to file a return and you're gonna have to use some of your 5.34 million.